Insurance companies often impose waiting periods before you become eligible for a new policy after cancelling an existing one. Several reasons contribute to this practice. Firstly, there is underwriting risk. Insurance companies need to assess the risk of covering you before issuing a new policy. If you cancel a policy before the term expires, it raises concerns about your financial stability or insurability. Insurers want to ensure they are not taking on undue risk by covering someone who may be more likely to file claims or have difficulty paying premiums. Secondly, coordinated coverage is a factor. Insurance policies are typically designed to work together to provide comprehensive coverage. When you cancel a policy, it creates a gap in your coverage, which can increase the risk for the insurer. They prefer to see continuous coverage to minimize potential liabilities. Thirdly, anti-fraud measures are in place. Cancelling insurance policies frequently can be a red flag for insurance fraud. Companies impose waiting periods to prevent individuals from abusing the system, such as obtaining coverage only when they anticipate a claim and then cancelling immediately afterward. Finally, state regulations can dictate waiting periods. Some states have regulations that require a waiting period before new coverage can be issued after a policy is cancelled. These regulations are designed to protect both insurers and consumers by ensuring fair practices and preventing fraud. There may be exceptions to the non-eligibility rule in certain circumstances. One exception is proof of a high-risk event. If you can provide documentation of a high-risk event that necessitated the cancellation, such as a job loss or a major accident, you may be allowed to purchase a new policy sooner. Insurers may consider these extenuating circumstances when evaluating your eligibility. Another exception is unfair cancellation. If the insurer cancelled your policy without just cause, you may be eligible for immediate coverage elsewhere. In such cases, you may have grounds to seek coverage from another insurer without the typical waiting period. Instead of cancelling your insurance policy, consider the following alternatives. 1. Discuss with your current insurer. Reach out to your current insurer and inquire about payment plans or discounts that could make the premiums more manageable. They may be willing to work with you to find a solution that fits your budget. 2. Shop around. Compare quotes from multiple insurance companies to find the best rates and coverage options that fit your budget. Different insurers may offer different premiums and coverage levels, so it's worth exploring your options. 3. Increase your deductible. Raising your deductible can lower your premiums, but be sure to weigh the potential costs of a high deductible against the savings. If you're comfortable paying more out of pocket in the event of a claim, a higher deductible could be a cost-effective option. Combining multiple insurance policies with the same company can often result in discounts. Many insurers offer discounts for bundling policies, such as auto and home insurance. Remember, it's crucial to maintain continuous insurance coverage to avoid potential financial and legal consequences. If you plan to cancel your policy, carefully consider the reasons and explore alternative options to ensure you have adequate protection. Always consult with your insurance provider or a qualified financial advisor for personalized advice tailored to your specific situation.